The latest numbers are in and we are starting to see softness in the condo market. Eesh. Specifically the downtown condo market, which is segmented by the CO1 and the CO area. So it is not good. Time to panic? Let's look at the numbers and see. Now, if you're looking for some data-driven realtors to guide you through your next transaction, because look, it's very weird again out there, like I've always been saying for the last few months, you can book a call with me using the link that's on the screen. It's right here, www.chatwithzen.com. Simply click on the date and the time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zen, and I run a RE/MAX brokerage in the Greater Toronto area on top of making awesome educational real estate content just like this one for you. And as usual, if you want access to all the data I'm talking about on this episode of the Market Watch and want to have an idea of whether you're detached, semi, town, condo, or whatever it is that in that specific city and how they're faring relative to the market, you can download the numbers for free by going to the link on the screen right here. Okay, let's rock and roll. And as usual, I always like to look at the month over month numbers in changing markets, and they are basically right here. Essentially, everything is the same as last month. Like, same. There's nothing overly critical to talk about in this Market Watch data other than the downtown condo market, which I'll talk a little bit about later. Your average prices are up by like a quarter point, like 0.25%, which is effectively a rounding error. Your months of inventory is down by 2%, which also is another rounding error. So the market isn't really moving in any direction. And remember what I've been saying, right? A month doesn't make a trend, but a trend does start with 1 month. And we are now 3 months into what I would call stability as of right now. So I think it's time to call this a trend. It's pretty stable, right? If you have a look at the numbers here, August, September, October averages are about the same. Like I said, same. We saw the 20-year low in new listings starting around like August or so, and that's kind of when prices stabilize. So at the moment, sellers are not desperate to sell. So back in August, I made this chart over here, I think, showing you what I thought was the best case scenario for the fall market, which was prices stabilize. But the media will always start reporting the stuff that's more negative, which is the year-over-year declines, which is true because we saw the prices start running up last year around this time. So that colored in the yellow area will continue going up until about March 2023 or so, which is another 5 months from now, so that it continues with the reported year-over-year declines, because that's just how it goes on a year-to-year basis. And this is what the chart looks like right now with the 3 months later, which is exactly the same thing because we hit the best case scenario despite 2 rate hikes because the sellers are digging in their heels and not selling. Now, I don't suspect we'll get any more inventory to see fall prices fall more substantially. Wow, that's a tongue twister. In the next 2 or 3 months. But what happens in Q2 2023, the spring market for next year, like I said in this video, who knows, right? Where I was suspecting weakness starting in September was the downtown condo market, and it's gotten worse, right? So unless you go looking for it, it's very hard to find, even though it's happening. And that's why you tune into videos like this for wicked nuggets of gold of information that I dig up. So similar to the average price of the Greater Toronto area, 1 month doesn't make a trend, but a trend does start with 1 month. And I noticed the months of inventory started creeping up in downtown Toronto condo market in around September or so. So for reference, for anyone who's not a giant real estate nerd, the downtown condo area is CO1 and CO8, which is basically, in layman's term, south of Bloor, Dufferin, Don Valley. And you can see it. I'll put a map over here. Now, you can see in this chart that I'm going to put up next that the months of inventory is getting eerily high right now, higher than the entire GTA market, which is around 2.6, I think. For now, prices are still stable, but you can see that it went up just a tiny little bit in the CO1 area, which is a downtown core, and went down a little bit in the east downtown core in CO8. Remember, months of inventory is the leading indicator in where prices are going. So if you get more inventory, buyers have more choices, sellers have to compete for a smaller pool of buyers, ultimately driving prices down. And 4 months of inventory is considered balanced, technically, right? But in Toronto standards, it's very high. So the 3-month trend of month of inventory going up is signaling a price decrease in the downtown market soon. And here's why I think this is concerning. Here's a point of reference for months of inventory currently in the downtown market. I'll put that up here. And here it is relative to the pandemic in April 2020. Remember then? Everybody panicked, didn't want to live in a condo anymore. Right? The current month of inventory is higher than it was in the pandemic in the East Downtown COA area. And in the downtown core, it's getting too close to comfort relative to the pandemic inventory. Yeah, trouble, right? Look, this isn't meant to scare you because this is some signal I'm seeing, but prices are still stable at the moment. I'm reporting this because with condo assignments on like absolute fire sales right now, because rates are high, condo owners don't want to be cash flow negative around like $1,500 with a property that has negative appreciation. Yeah, this means that condo investors right now are losing money even when you factor in a tenant paying down the mortgage. It's wild, right? And the rental market is slow again due to seasonal norms, which is normal, right? So it's not looking good for downtown condos as of right now. So if you had something that you kind of had to fire sell to get some liquidity, get some cash for, a potential recession, that's the asset you sell first, right? Now, if you found this content useful, it probably means other people will as well. So make sure you do me a solid and smash that like button and share this with others. And while you're at it, make sure you subscribe to the Prime Properties channel so that you know when I drop awesome content like this. Because as you can tell, I'm a giant nerd with all these numbers, and the nerd in me can see the analytics, and many of you who are watching are not subscribed. So don't be one of those guys. Thank you. And if you are looking for some help in regards to how to navigate this real estate market, you can book a call with me using the link that's on the screen. It's right here. It's www.chatwithzen.com. Now back to what we were talking about, the market watch stuff, right? So remember how the last few months have been like record low sales? Well, October was no different. Have a look over here. We're now at 23-year low in sales, up from 20, which is not a good thing. It's not the direction you want to be heading in, right? And the saving grace, as usual, of all of this is that the new listing volume is also very low. While it's not like a 20-year low, just 10 right now, but that's what's keeping prices stable. Sellers aren't selling. They're digging their heels in, right? Now, the thing I will note is sales is going in one direction and the listings are going the opposite direction. That's why I'm concerned about condos, because inventory in these bi-directional ways is building up. It's building up a lot faster in condos than it is in freehold. Now, for freeholds, it's still very, very low and will likely won't be getting the next kind of like surge of listings until like Q2 spring 2023. And finally, active listings remain very low. And we saw a number similar to this for active listings in 2019, which means on like a macro level, we're slowly seeing listings grow at a faster pace than it can be absorbed. I'll bet there's a very, very snail-like pace, which could be justified with the seasonality. But again, first month, and I'll keep you guys posted. Now, we shouldn't see active listings grow much more because of the seasonality, but if it does, it's not a good sign for how we're going to move into the next year in 2023. So in a nutshell, things are pretty stable. I don't suspect any major price movements in the short term, call it 2 to 3 months, despite potentially another rate hike in December. Yes, I'm expecting one, 25, 50, who knows? There is some signal that the downtown condo market is building up inventory that could be soft, with lots of inventory coming to the market in the near future from the record sales in 2017 and 2018 in the pre-con side. And there's very, very, very minor noise that inventory is building up as a whole in the entire GTA market, including freehold. But I'll monitor that for you just because it's just 1 month and it's not quite a trend yet. Now that's a wrap for this week's or this month's Market Watch. And if you do want to get in touch with me to chat about your next real estate move, you can book a call with me using the link that's on the screen. It's right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.